How do you think about the first half of 2025?
Yeah, well, the first half was obviously all these tariff shocks.
Anything surprise you?
That's the strength of labor markets.
How do you think about the global monetary policy?
In the Eurozone, they had room to cut rates. The Fed's on a wait-and-see path.
How about the asset prices?
We don't forecast the gold price. I leave that to the brave people.
Let's talk about the second half of this year.
It's going to be uneven growth story. The major economies are in different positions.
How can we sustain global growth?
Get rid of the uncertainties. My team thinks the uncertainty around the tariffs, that effect is actually larger than the tariffs themselves.
Well, thank you for your time today.
My
It's
pleasure.
my great honor to see you in China.
It's great to be in China.
How are you feeling for this forum?
It's very busy. We're talking about obviously tariffs, the future of globalization. People are worried about the situation in the Middle East. So all of the big macro issues.
You talk about the tariffs. So how will the tariff influence global economy in the second half of this year?
Yeah, well, tariffs are negative for us economists. So it's a tax on yourself. So we've been putting the tariffs in our forecast, and the forecasts are a bit lower. It's partially the tariffs, but it's actually the uncertainty around tariff policies. So when there's a lot of uncertainty, firms stop investing, consumers stop spending, the M&A market stops functioning. So the longer we have the uncertainty around tariffs, we think the longer we have downward pressure on growth. So we tried to build that into our forecast. But my team thinks the uncertainty around the tariffs, that effect is actually larger than the tariffs themselves.
But S&P graded many regions their GDP growth. What's the logic for that?
Well, we didn't change the advanced economies. We changed China because in our previous round, we had higher tariffs. So we're assuming lower tariffs after the 6-month pause. We raised some of the other emerging markets as well. So we have a little bit higher growth. We're at 2.9 globally right now. And again, a lot of that is just tariffs weighing down on growth.
We are halfway through the whole year. How do you think about the first half of 2025?
Yeah, well, the first half was obviously all these tariff shocks. We have tariffs at rates we have not seen since the 19th century out of the US. Those are paused, so we'll have to see what happens in the second half of the year. But a lot of the data were distorted in the first quarter. So, for example, in the US, we saw a lot of imports to try to beat the tariffs, which started in April. So the first quarter was very weak because imports are negative for growth. In China and other countries like Ireland, the exports were trying to go out before the tariffs, so growth was a little bit stronger. So we're actually looking at the first 2 quarters of the year together. We're not focusing on quarter 1 or quarter 2. We're going to take them as a whole. Just as an example, in the US, it looks like the second quarter's going to be about 4% growth. So maybe 2 for the first half of the year as a whole, but definitely slowing.
Anything surprise you?
Other than the tariffs, the surprise is the same surprise we had for the previous 2 years. That's the strength of labor markets. So all this volatility, all this uncertainty, US labor market remains strong. European labor market remains strong. In the advanced countries, that's really keeping growth from falling into recession. So that's the one variable we're telling everyone to watch. Watch the labor market in the US. If that starts to really crack and the unemployment rate goes up, that's a signal that we're going into recession. But right now, it's just a slowdown, not a recession.
The Fed take a pause on the cut rates,
Yeah.
but ECB and the Japan central banks have any other interest rate policies. How do you think about the global monetary policy?
Yeah, well, it depends. In the Eurozone, they had a borderline recession last year. So growth was slowing, inflation pressures were slowing, so they had room to cut rates. The US really didn't have a recession. We were running a bit hot last year, so the Fed has interest rates a little bit high. Tariffs are complicating the picture right now. So Chairman Powell has been pretty clear that they need to see evidence that the economy is slowing and that the tariffs are not going to have a lasting effect on inflation. We know that tariffs are going to raise the inflation level kind of one time, maybe to 3.5%, but they want to look through that to the underlying trend. But the Fed's on a wait and see path, so it's probably going to be a few more months before they start to move down.
So will the Fed cut rates this year?
Yeah, we think they'll cut maybe once or twice later in the year. The news today is saying some governors are ready to go in July, but we think that's too early. We think it's going to be later in the year. Chairman Powell has been pretty clear he wants to see more data on tariffs and to see how much they're passing through to consumer prices. The pass through has actually been smaller than expected so far.
We also see the US dollar is depreciation. So how do you think about this trend and what's the impact of this trend on global economy?
Yeah, well, the weak dollar is something that the US administration wants. They've been talking about having a weaker dollar. It's actually helping some of the other economies with inflation because if your currency is strong, your import prices are lower, so that's keeping inflation down. That plus lower oil prices, at least until last week, those two together were putting downward pressure on inflation. So we saw a lot of emerging market central banks have a little bit more room to cut rates. So having a strong currency holds your import prices down, and then that gives you some room to lower rates. So not a bad thing for the rest of the world as long as US growth kind of holds up.
Do you think the emerging market will perform better in the second half of the year?
It depends what kind of emerging market. So India, for example, has been a growth star. For countries that are tied to the US, if the US does relatively well, they're going to outperform. Countries that are tied to Europe, they had a week last year because Europe was in recession. And China looks like it's pretty strong too. So if you're a domestic economy, like India is mainly domestic, same with Indonesia, they might be relatively well. If you're dependent on trade, we know global trade is weak. Those guys are probably going to underperform. So it depends what kind of economy we're talking about.
How about the asset prices?
Yeah, well, housing is very elevated in the US right now. So one of the things the Fed wanted to do, I think, is moderate housing prices. But the other thing is the markets. So the equity prices are very sensitive, apparently, to tariffs. So we've seen this very clearly. When the tariffs go on, the market goes down. And when the tariffs are paused, the markets go up. So there's this kind of interaction between the financial markets and the US policymakers. It's kind of interesting to watch. It's pretty clear the markets don't like tariffs. And when the tariffs go up, the market goes down. So I think the market's expecting some kind of stabilization of tariffs, and the markets are not that far off of all-time highs. So there's some optimism baked into those equity market numbers right now.
I think nobody likes tariffs. The gold price is another story. How do you think about the gold? Actually, some financial institutions said the gold price will reach like $4,000.
Well, gold is, kind of goes up and down a lot. What we do know now is because of the, uncertainty around U.S. policy, the reserve accumulation of dollars has gone down a bit, and reserve holders are switching into gold, and they're also switching into euros. People buy gold for a lot of reasons, but one of the things supporting gold is actually a move away from the dollar. It's not a huge move, so the dollar is still the number one reserve currency, but we've seen some rotation away from the dollar toward gold and toward the euro. But gold is always seen as a stable store of values, and when markets are volatile or policy is volatile, gold tends to be supported. So that's part of the story of the gold price strength. We don't forecast the gold price. I leave that to the brave people. Okay, so
Let's talk about the second half of this year. What's the risks of global economy?
yeah, well, let's start with the U.S. The U.S. is supposed to have a landing this year. So at the beginning of the year, the U.S. story was growth was about 3%, which is too fast. That's why the Fed is raising rates. The sustainable growth rate for the U.S. is 2. What we're afraid of now is the U.S. doesn't go from 3 to 2. The U.S. goes from 3 to 1 and has a growth recession and then comes back up. So we're expecting the U.S. to slow. Europe has already made the adjustment after the Ukraine war, the effect of that on oil prices. So Europe's euro should be strengthening. The euro area should be strengthening, and then China looks like it's pretty stable. So I think we have pretty steady growth and the emerging markets should be doing okay as long as oil prices stay low and the dollar is well behaved. So U.S. has got to slow down a bit, but the rest of the world is pretty stable.
So the growth will be very uneven, right?
Yeah, it's going to be uneven growth story. The major economies are in different positions in terms of the cycle and exposure to oil prices and other things.
We are in a world full of uncertainties and challenges. How can we sustain global growth?
Get rid of the uncertainties. I think the good scenario has some resolution for tariff policy. So we have two schools of thought in the U.S. about the Trump administration. The first one is the tariffs are a temporary negotiating move and we settle on permanent tariff rates. The uncertainty is eliminated and then we're starting to grow again. The other view is this is going to be kind of a constant negotiation, kind of a reality show or something like that. In that world, I think uncertainty remains high, and that's going to dampen consumption and investment. So we'll have to see in the second half of the year. Are we able to get resolution on tariffs and eliminate that uncertainty, or are we going to still be in the same world where U.S. policy is very unpredictable? And if it's unpredictable, that's a slower growth.
So should the investors be cautious?
I'm not supposed to give investment advice, but investors are watching very closely what's going on in the White House, and markets don't like uncertainty. So when they see uncertainty, they pull back. If we get certainty around tariffs, and if we get certainty around the situation in the Middle East between Iran and Israel, both of those would be good for markets.
Last topic, I want to move to China. This year, the AI in China attracted a lot of attention. How do you think about the AI industry in China?
Yeah, AI for us is kind of a medium-term story, so it's hard to identify directly what's happening to AI on a kind of quarter-to-quarter basis. What's pretty clear is businesses everywhere, here in China, US, Europe, they're trying to figure out how to apply AI to their operations. There's a lot of potential productivity gains. So what we would expect is over the next, let's say, 5 or 10 years, we would get AI generated productivity gains. That would be a boost to growth. That's going to be split between kind of, firms and workers. But the economics profession is pretty aligned on the fact that AI is positive. It's a question of how much. Some economists think the effects are going to be relatively small, and some of the investment banks think we could get 1 extra point of growth per year for 5 or 10 years, which would be great. I think it's still early days, but we'll have to see where AI gets applied. But, it's exciting new technology, and you can kind of imagine the potential to give us at least a temporary growth boost, which would be a good thing.
So will the AI be a main driver for economy in the future?
I think over the medium term it will. It takes these inventions. Electricity is a good example. It took electricity like decades to work through the US economy. So AI might be faster, but it will take a number of years to get AI to work through the economy. Some sectors are going to be faster, some sectors are going to be slower, but I think it's probably a tailwind or a boost to growth over many years, which is going to be very helpful, right?